All right, everyone. So we're going to go ahead and jump into the game plan for the week ahead. Before we look forward at the week ahead, I want to look back for a moment, and I also want to kind of lay the framework of something I've been doing that's been working really well for me. So I'll talk about that in a moment. Over the last week, overall, we had some decent price action. We had great opportunity on a couple different stocks. WISA gave us some opportunities 3 days this week, Tuesday, Wednesday, and then again on Friday, although I didn't trade it Friday. And there were a few others that were nice. I was in New York for 3 days on my traveling trading station. So Monday, Tuesday, Wednesday. And that was fine. Didn't have, I mean, that's a, no big deal there, but was being a little more conservative just because I was traveling, just not wanting to overstay my welcome. But I started the week actually on Monday. It's not even registering here, but I was down like $70. Friday, a week ago, was down 650. So technically, if we look at the calendar, I think it's 2 red days in a row here. Well, I guess I must have been green before the commissions at $29. In any case, doesn't matter. It was a break-even day. So 14,000 first week of the month, 14,000 second week of the month. Solid. 28,000 on the month. This week, came up a little short of that, and I was up 10,000 on Wednesday, and then I gave away, 4,200. I gave back too much. So this could have been and did I not? Oh, no, I'm sorry. And Friday was a no trade day for me. So I thought I forgot to import my trades, but there was no trades. So anyways, came up a little short on this week, but there wasn't much to trade Monday. Tuesday was kind of slow before I had to roll out. And then Wednesday gave back too much profit. And Thursday was okay. But then Friday, there was nothing. So, a little choppy, but at the same time, big picture, sitting at around 40,000, 38,000, 40,000 or so for the month here, 37, whatever. For the month of April, I would say that's pretty good, right? And so if we kind of take a step back here and just look at the last 30 days, the last 60 days, or the last 90 days, we kind of look at the whole year. I had obviously this really nice month of February, and then during February, I took pretty much all the restrictions off my account when it comes to position size. I was going big. I was being aggressive, and that was the right move. I made 100 grand, but I then gave back, 30 of it in 2 days. That I guess I must have made more than 100,000, but it was more like 100. It was like 130,000. So I gave back 30 grand in 2 days. That was not good. That was very sloppy. And so I put the restrictions back on my account following that drawdown. And that was what gave me the recovery and, that I've been in basically since then for over a month. So what I've been doing each day, I'll grab my whiteboard here. For those of you who maybe have missed this, is each morning when I start trading, when I open my platform, I have a max position of 5,000 shares. That's my max position right now. Now, on a typical day where I'm feeling good, I'm happy to take 10, 15, 20,000 shares. I haven't had, 25,000 occasionally. I haven't had too many 30 or 40,000 share positions recently. I'm happy to do it if we had the volume and something was really strong, but it's just not as common. So in any case, starting the day with a max of 5,000 shares is very low. And what I do is I keep that there until I've made more than $1,000. So once I cross over $1,000 of profit, the first 1,000, then from that point, I take that restriction off my account. I don't move it up to 10 or 15. I just take it off completely and I have no cap. And then from there, I keep growing and I trade aggressively. The reason I do this is because when I'm starting each day at zero, that's when I'm carrying the most risk of having a red day. If on that first trade, I take 20,000 shares and I lose 30 cents, I'm down 6 grand. Right now, I've really screwed up. I've made a mistake. So I've got to manage my risk. I've got to keep that tight. And starting with small size has been really helpful. So although I have had a couple of red days here, this was the worst red day, the $5,800 red day. And it was a day where, I hadn't yet sort of built this in. I think I was trading a slightly higher price stock and anyways, sort of recovered. And then in 2 losses was back to red and was like, well, that's it for me. So that was kind of a bummer. But But then I got a little bit better as I got into this stretch about keeping that restriction on. And this $656 red day, this is a good example of, okay, I went red, but, sort of stair stepping down, small losses, ended up having a decent recovery there, but the whole time kept my share size capped. So did a really good job managing risk when it comes to share size. And that's what I'm going to continue to do. So until I've broken that first $1,000, I'm not increasing size. So if I do go red on the day, if on the first trade I lose 2,500, my instinct typically would be to increase my size to try to get a quick recovery. And unfortunately, I know that that can also give a quick doubling of the loss, and I'm down 7,500. So I'm keeping my cap on, and if I am able to make my way back to green or flat with that cap, that's fine. If I can get myself up over 1,000, then at that point, I can either call it a day because I went red, or I can increase and start to scale in depending on what the market's looking like. So this has been a big help for me. Okay, so when we look, I encourage you to try it if you're struggling with having big red days yourself, or you're struggling with a consistency. So I've had to kind of bring myself down into this more just pared back version of trading, just because the market, although it's been hot at times, it's also been a little bit inconsistent, and I just find myself getting a little too aggressive at times. So I've scaled back, and I've been feeling much better. So like emotionally, I feel so much better than I felt after, of course, those 2 red days after this recovery. And the recovery's been a solid $55,000. So that's nice. All right. So I didn't make it all back in a day, but I settled in, and I dug myself a big hole, and I had to take some time recovering. So over the last week, when I sat down on Monday, and when I sat down here on Friday, or the other day on Friday, I was disappointed to see that there was basically nothing on the scan. So each day I sit down, and of course I'm checking my scans. And although we had one stock that went up a bit on Friday with a slightly higher float, everything else, this was really dismal. We didn't have big gappers on Friday, and we didn't really have big gappers on Monday either. So I was kind of bummed out by the lack of catalyst on Monday. I expect it for a Friday. And I said this, but most companies aren't going to put out fantastic news on a Friday. They're going to hold it and save it for Monday or Tuesday, when people are going to see it, react to it, and then potentially the stock can benefit from several days of momentum. That's not going to happen if you put news out on a Friday. So Fridays are wild card days. Usually early in the week is better. So that's why I was more surprised that we had nothing on last Monday. Now, WISA did end up moving a bit on Friday. Unfortunately, because it was a continuation setup with lighter relative volume, I didn't feel I could trust it. But I know some of you guys traded it and made some money on it. This was nice going into the close, although going into the close on a Friday is sort of a lighter volume in total time to be trading. Lighter volume, what does that mean? You're going to have bigger spreads. Liquidity is going to be a little bit more difficult. You're going to have a hard time moving in and out of big positions, and you can have, rejection candles like that where it drops $1 a share and there's not the liquidity to exit the position. So I still feel confident that trading the morning is the right time, although we did see that move in the afternoon there. And we saw a move in the afternoon on WISA a couple days previously, but again, much more volume in the morning. High volume selling, though, at the open on this particular day. This was Thursday, I think it was. Or no, this was Wednesday. So WISA, we had on day one, it was a grinder, $2 to $3 price range, not much of a move until all of a sudden around 10, 11 o'clock, it pulled away. I missed that move because I had already left for the day. I kind of had dismissed this as not thinking it was having a lot of potential. But day two, I traded it pre-market when it was continuing. So that was good on day two. And then this was day four, a little bounce at the open, didn't trust it. Let's see. We also had, I just want to sort of recall, I'm going to filter here just for the week and look at the detailed. So profit loss ratio kind of, positive, but, $500 winners, no big winners. 61% accuracy is a little lower. I want to look at instrument here. So WISA, BPTH, right? Pally. So BPTH, let's take a look at that one. Actually, the only stock I was read on was EDBL, and it was $29. That's not so bad. So BPTH, this was the other day. We had a nice move pre-market. So this one, the move was really pre-market and a little bit at the open, and then we rejected. So nice pre-market move, sell off, coming back up, curling, squeeze at the open, and a move higher. So and then EDBL, this one was a bit more of later in the morning, which was kind of surprising, but gave this first punch up higher, pulled back, and then squeezed there. But I think it's pretty safe to say that most of the momentum this week was before noon, at least. Afternoons were sort of slow. And it was light volume. I mean, look, I actually only traded 1, 2, 3, 4, 5, 6, 7, 8 stocks all week. If we just contrast that to, I don't know, well, we could just do middle of February, just as an example. This was a time where it was a little hotter. Let's just see like this period, how many different stocks I traded. $60,000, and there's more stocks than you could list because there was so much stuff moving. So there's no doubt that this is a market right now that's a little cooler than that period was, but it can still be profitable as long as you're able to be disciplined. And I think this week I did a good job exercising discipline on Friday by not taking any trades, on Monday by walking away basically flat, on Tuesday by choosing not to scale up because I got over 1,000, but not in a big way. Friday was a little tough. I had gone red, but I did have a nice recovery. And in hindsight, I had thought I probably should have just not even traded at all on Friday because this is where I dug myself a bit of a hole and I recovered pretty well, but it was like, that was dumb. So this Friday, it was easier for me to say, let's hold the discipline and not trade at all. Wednesday was a little tough because I was up 10,000 and gave back a bit too much of that. Looking back here, that's a solid day. As it's a shame I had that final loss. I think I just overstayed my welcome a little bit. So this week I want to try to be a little bit better. This coming week I want to try to be, I don't want to say better at walking away early. I did a good job on most days, but I want to just keep that in mind. And I also am kind of thinking the next day I cross over 10,000, I almost just want to stop because I've crossed 10,000 a couple times. Here I had another day I did it, and then finished giving back a good chunk. So I'm like, the next time you're up 10,000, maybe just take it off the table. It's hard to know when to walk away, but I just have had a few days where I feel like I gave back a little bit too much, and that kind of bummed me out a bit. So in terms of our continuation scanner for the week ahead, I'm not feeling super confident trading off of this scanner right now because a lot of the moves that we've had have not been solid when they've been continuation. It's been better trading just first day of news. When we're in a hotter market, the continuation scanner is something I rely on a bit more, but right now I'm not really feeling it. A lot of these popped up and came back down, and rent, this was great, but then has come back down a lot. And unfortunately, it's under the 200 moving average. If the 200 was down here, I would be like, okay, we should take a trade for the move higher, but it's going to run into resistance of the 200. I think that's a problem. So I'm not liking that right now. NVFY, lower priced on Friday, put in a little move, didn't hold, retraced. Again, kind of cheaper and lighter volume. I really think this would be a very difficult time to be trading with large share size because I just don't think it would be easy to get in and out of these positions. I mean, certainly not within the span of 3 to 4 minutes. If I was holding positions on average for 30 minutes, I would have time to scale in and out, but I don't have the conviction in the market right now to hold for that long. So my trades are short because I feel more confident getting in and getting out, getting in, getting out. And it's easier to predict what something will do in, 3 to 5 minutes on a quick breakout trade than over the next 30, 40. Especially, even on some of these, we've just seen such big ranges. I would like to get better at holding longer, but then I look at some of these moves and I'm like, well, golly, how can I get comfortable holding some of these longer when you have some of these individual candles that are like 70 cents a share? Especially on something like WISA. I mean, some of these candles are really big. So like this here squeezed to 944, it dipped down back to 9. That's a 44-cent dip. All right. So if you'd gotten in here and just held, you would have held to a peak, dipped down, held here, it dips down. Where do you sell? And it's really hard. I think for a lot of traders to know kind of the right answer there of how long to hold some of these. And maybe I sell them too soon, but I also think if you're walking away with profit, you're doing something right. So it's kind of about optimizing when you've got something that's working, but you don't want to break what's working. So I think right now I'm on a pretty nice, I'm in I don't want to say it's a hot streak because it's not really a hot streak, but I'm in a nice mental state of feeling confident and feeling almost a sense of relief in this strategy that I've been using of starting each day with, with a 5,000 share cap. I mean, it just feels nice because for the most part, I'm not exposing myself to a lot of downside risk, with the exception of trading higher price stocks. So my bigger drawdowns have been on the higher price stocks, which actually makes me think we can go and take a look here on profitability by price for the month of April. So profitability by price. Yeah, see, look at that. Isn't that interesting? I really don't have anything over 20. Let's just select the over 20 just for a second. So it's not that I don't have trades. I have trades. They're just not producing profit. So, and actually, sorry, that was just over $10. So like that's the zone right now, 2 to 10, that is working better in this current market, right? Now, look, in a hotter market, this is just the month of April, so I'm not going to make any big decisions about my entire future of how I'm going to trade. But for right now, I'll recognize that I'm doing better between 2 and 10. And I need to be a bit more careful on higher price. And I am actually applying that from the takeaway in March, which the same trend was true in March, except that I had big losses on these higher priced ones. And that's what got me into some trouble. So anyways, I'm going to try to stay focused. I'm going to keep my head down. I'm going to show up every day because you never know when we might have something that's strong, but I'm going to recognize that this is a base hit market. And you can lock up base hits as I have, over the last, several weeks and, just chip away. And then when you look back, suddenly it's like, oh, wow, okay, I've made some nice progress here. And then hopefully at that point, the market starts to heat up. And now your account's at all-time highs. And when it heats up, you're just leaning in. So I hope you guys enjoy this little game plan for the week ahead. I'll remind you, as always, to hit that thumbs up, subscribe to the channel, and I'll see you bright and early on Monday morning.